Hey guys, welcome to another episode of Recruitment Entrepreneurs by Recruit CRM. And today I have the awesome Jonathan Clues from StudentBridge. Hi, Jonathan. Thanks for taking the time to do this.
Hi, Sean. How are you?
I'm good. And Jonathan, to get started, can we sort of start with what you do at StudentBridge?
Yeah. Well, I guess the best thing is I do everything because I'm the CEO and founder. So I do a lot of
Cool.
I do a lot, but I try not to get too deep in any one area.
Sure. And what does the company do? Like, what's the core business
Oh,
model?
I see. So what does StudentBridge do? Yeah. Okay. So StudentBridge, we are a technology software
Okay.
for really enabling video delivery for the recruitment of students. So we create video experiences
Okay.
that allow a prospective student learn about a potential institution, and so that is a core part of our business. We deliver that through what we call video view books, interactive campus maps. We've got an in-person tour application.
So can you give this to me from the perspective of a student? Say I was a student looking to go to maybe, can you name one of your clients? Like
Boston
that
University has that.
Boston University. So if I was a student, I wanted to go to Boston University, which of your products would I like interact with?
Yeah, but so we actually work more like a white label. So we embed ourselves very much into the school,
Sure.
the EDU's existing marketing materials. And so
Sure.
what we do is create high impact experiences. So we are embedded into their website. So it feels like you're always
Sure.
at the Boston website, but if you're in person, you're going to get a Boston branded experience. So we build branded experiences for universities. But
I
yeah, video
uh,
experiences. I mean, we see video.
got it. And so to cut you in there, so if I went to bostonuniversity.com or just went to their website, like which parts of the website, if I clicked on, would I see stuff that was basically your tech?
Yeah, admissions. So we really help the admissions pages, admissions enrollment.
Got
So it's
it.
all
Got
about
got
recruitment
it.
of students.
Got it. Brilliant. And how did you get into this? Because this isn't like something that, someone wakes up one day and goes like, I'm going to build tech for colleges.
No, and I think like most things in life are probably a sequence of events versus one event. So I have a very untraditional background. I used to be a professional race car driver, so I speak fast, move
Awesome.
fast. Everything I do goes fast. And so after winning 2 championships and 20 odd races, when I finally hung my helmet up, I got into the internet. Just what should I jump into? And it's too late for me to go and get a law degree or a doctorate.
Okay.
So I went and jumped into the internet where there
And
was no
and,
real
and which competition did you race in?
Formula cars. So I
Oh,
won the
crazy.
British Formula 4 Championship. I was the US Rookie of the Year over here in something called Formula 2000. I was trying to get to
That's
Formula 1.
amazing.
Yeah.
That's amazing. Incredible. And
Yeah.
how's that transition been, right? Because that's like a different world.
Well, it's a very different world, Sean, but the transition in many ways is actually far more parallel than you'd ever think. Ruthlessly competitive, which you need to be as an
Yeah.
entrepreneur. Uh, Take failure on the chin, learn from it, and come back and win. Totally not. I mean, look, I won 20 races, but I didn't win 100 races.
Yeah.
So even though I had a good
Sure.
winning record, it's a bit like a batting average. You still got to learn from all the ones you don't win. 3, it's even though the CEO and or the brand and or the driver are in the spotlight, the car doesn't go around the track without a good team rep behind it. And so it really teaches you that while you might have the spotlight, how to
And
build a team.
and Jonathan, to cut in there, right? So did you go straight from being race car driver to entrepreneur, or did you have like a
Yeah.
normal day job in the middle? No day job.
No, well, so when you race cars, great question, Sean. When you race
Yeah.
cars, look, the series had 18 races a year. Well, that's a weekend, so that's 36 days a year. Maybe I tested another 20 days, so 56 days a year I was driving a car. For 300 days of the year, I had to be an entrepreneur, marketing myself. I'm marketing the challenge or the excitement of being involved with a race car driver for sponsorship. I was raising millions of dollars or hundreds of thousands to $1 million. And so there was a big marketing and entrepreneurial push, and you had to be entrepreneurial because everyone tells you no. And so again, it's working out how to move through and
Got it.
kind of get funded for your dream.
Got it. That gives me a lot of context. And how did you get into like, and even before we go into how you got into race car driving, can we just go back for 10 seconds and talk about your story growing up? Because you obviously don't sound like you were born in America. So are you from the UK? Is that
What
right?
gave it away? Yeah, no, I'm from London, England. So I was
Okay.
born in England and moved to the States. So my parents always had like a lot of love affair for America. Every year would come over for vacations and holidays here. My dad actually used to have a house in Houston, so I got a lot of exposure to America. And when my racing career, when I won the British Championship, it was America. I wanted to come and race in IndyCar. I was Formula One stroke IndyCar, so came across to America in the 90s.
Oh, cool. Incredible. And so when you started this business, right? So this is obviously a very techy or tech-led business because it's
Yep.
not like a traditional recruitment type business.
Correct.
So how did you get like the tech? Like, did you learn how to code yourself, or did you partner with a great developer or hire them? Like, how did that work out?
Well, remember I was saying like life normally is like an evolution of multiple different
Yeah.
things versus just to wake up one day and say I'm going to do this. So one of my first jobs, if you want to call it that, after retiring from racing, literally a couple of weeks later, someone from the racing world hired me as director of marketing for an internet company. And so that was my exposure to the internet. It was like, okay, now they knew I was a good marketer from all my marketing that I did for myself. And they wanted me to apply to their new .com startup. This is literally in 2000 during the .com crash. And so I just got the baptism of fire. I mean, I was head of marketing. I was head of product.
What was that company called? What was the .com called?
It was called BetSwap. It's not around anymore. It was a person-to-person betting. It was a really brilliant idea. They just unfortunately it was underfunded, but the .com crash didn't help that either. They raised about $1 million, and our competitor raised 42 million. So we were just outgunned at every intersection. But it was a great learning experience, and it really got me to the sharp end of the internet development, especially when it came to not just brochure websites, but websites that actually did something. So functional database-driven websites. And we built the website itself. The build back then was over $1 million for the build price. So it was a big deal, and I was running it. So that's kind of where I got my kind of baptism into the internet.
Got it. And so in this team, when you started out, what did the founding team look like?
Yeah, so basically when BetSwap didn't make it, unfortunately, I actually at the time started just a web development agency. I was like, look, there's a lot of people out there in the early 2000s with big ideas, and there's a lot of people out there that are going to develop those ideas for them, but no one spoke business sense. There was the techies were really good at tech, but not great at business. These guys didn't speak tech. So we started a company to be like the middle layer. It was called iMediate, with the idea to mediate your idea, Sean, with a bunch of developers, and we'd sit there mediating. That business, I'm proud to say, is going strong 22 years later. I mean, it's really one of the bigger, more prolific businesses helping the NGOs out of Switzerland. So we help the international.
How big is it today in terms of like revenue scale and employees? Is it like tens of millions or hundreds of millions? Or?
No, it's tens. I mean, it's sub 10 actually. Very much a lifestyle business. My business partner in the UK runs very much a lifestyle business.
Is it under 5 or over $5 million?
Over 5.
Okay, so 5 to 10 million bucks. And
yeah.
I'm guessing like 20 employees or something like that.
Yeah, just over that. So yes.
Yeah, cool, incredible.
Yeah, but it's a great business. It does really well, profitable, big profit. It works on big profits. I actually stepped away from it now, so I'm just a kind of a silent advisor on it. But my business partner that I gave the reins to has done a great job with it. And but that business really kind of gave me that you asked about. I don't have a background in development. In fact, I think you asked about entrepreneurism. I think one of the key skills all humans need to do is understand their limits. And I know I'm not good at developing. So my job was to think of the ideas and hire great talent to come and make it happen. And so that was the start of what we called RealView TV. And RealView TV we founded in 2001, which was born out of the web development agency. And that was a video delivery platform. So back in 2001, we were like, hey, video is going to take over the web. This is going to be the future. And so we developed an interactive video delivery platform to stream content in a far more interactive way. And so that's the first business that I really raised funding for.
Got it. And so did that transition into being StudentBridge or like?
Right. Yeah.
Okay. So you rebranded it, or is it a separate business?
Yeah. So I funded myself was a complete kind of bootstrap business. I didn't go to friends and family. I literally went to banks and credit card companies and got myself into a lot of debt, about half $500,000 worth of debt, which is scary. At one point, Sean, my minimum payments on my debt for the banks were about £3,500 a month, which is about $4,500. But my interest was $5,000. So every month I was paying this money and still going deeper in the hole because all the credit cards were like 20.
That sounds horrible.
How
did you fix that problem? How did you fix it? Did you have to like declare bankruptcy, or did you raise funding?
Yeah, I was down to going bankrupt. There's definitely an option, but the business is actually going well. Just my hole was big, but the business was actually growing very nicely. And so I just, reality is I just fixed it through sensible money management. I just separate. I did some balance transfers to get 0% for 9 months, and I just paid off the highest balances first, and then slowly started accelerating the debt payoff. So it took about 6 years to 7 years to pay off the debt, but I did it.
So you're like one of those Dave Ramsey pay off your debt type stories in that
Well,
sense.
done it. I guess I am. I mean, like, look, I literally at one point I think I was down to my last $100.
Oh, that's crazy. That's crazy. That's great to know though. So it wasn't always like went from driving race cars to starting a business, became a millionaire.
Oh,
overnight.
it was rough. Oh, it was rough. I mean, so the business was started in a bedroom, and then it moved to my friend's living room because his parents went away for 2 months, and then we went to a storage unit. I mean, we've had some rough years.
And in the 20 years and is it right to say you've been in business for 20 years with this specific
22.
business? With
Yep.
22? Have you raised, how much capital, outside capital have you raised? Or have you not raised any?
Yeah, no, we have. So basically, Realby TV, I raised a very small amount in the UK.
Sure.
And then in 2006, I was introduced to a very predominant investor in the Southeast here. And we raised $2.5 million in 2006 for a 2007 launch. That then went up to about 4 and a bit million. And then what we did was we created StudentBridge to acquire Realby TV. So Realby TV by then had customers in every single industry: healthcare, automotive, hospitality, and education. But we felt that we really wanted to double down on education. And you asked why, and I could definitely share that with you. But we created StudentBridge as a new co, raised about another 4 million, bought out Realby TV, and then since then we've raised about another 6. So we've raised about 10 or 11 million for StudentBridge so far.
Got it. And was a large part of the initial capital mainly for just acquiring the other business and cleaning up that cap table? Was that most of the raise?
Yeah. We've had kind of more OPEX than CAPEX capital, so it wasn't really we ever got a huge check and said go and build a load of stuff and get going. It's always been kind of like more like life supply, kind of like a lifeline supply.
And is StudentBridge like more like a SaaS subscription business where you charge universities like a certain amount of money for your technology?
Yeah, its foundation is very much SaaS. So there's an annual subscription to our software. And then when you buy the software, you also get access to our pro services team, which we content creators and people like that. And then the revenue is about 40% for services, pro services, 60% SaaS.
And what does the average university sort of pay you, right? Like is the average university giving you a couple $100,000 or like 50 grand or 10 grand a year? Like what does that mean?
No, the average university right now is, I mean, the average would be about 50 to 100 would be the sweet spot for the initial signing. But we sign them, we try to sign up 3-year contracts. We accept 1 year if we have to. There's definitely reasons to do a 3-year. But then most of our customers stay with 7 to 10 years anyway. So we have a very good lifetime value.
Got it. And now that you've raised like 10, 12 million on this business, have you been able to scale the business to that 5 to 10 million in contracts,
absolutely.
Or is it bigger, smaller?
No, I mean it's busting through the 5, aiming for 10 to give you kind of some like general terms. It's a hard graft. I'm not, I think we're all wishing we got to where we were with half the capital.
And faster.
My investor always said it takes twice as long and costs twice as much, and he was right.
Yeah.
Because we've taken twice as long as we hoped, and we've spent twice as much. We've got real value in the business now. I think that's the peace of mind. Is when you see enterprise value come back as real enterprise value that gives everyone a return on their investment.
And how do you value a business like yours? Would you value your business like a traditional SaaS business at say 4 to 10 times your subscription base in a sense?
What you do with a business like us, you have to break it up and you go, right, the SaaS base is worth X and the service stuff is worth X. You bring it together for a combined multiple.
Got it. Is the SaaS part of your business over 5 mil already? Or is it around that?
That's approaching 5 mil.
5 mil. So 1 to 5.
And a lot of PE firms really want your SaaS side to be 5 mil.
Yeah. If you want to do, and so now that I have you, right, unlike a traditional recruitment entrepreneur, you built a tech business, right? You built a successful tech business that has a services layer on it that probably helps you drive EBITDA and scale. How do you think about ownership, right? Because you've been doing this for a long time. You're not one of those started and flip it type entrepreneurs, right?
Yeah, sometimes that could have been a better way to go. You're absolutely right. I have not been a start it, flip it entrepreneur.
Yeah. And so how do you think about ownership and equity? Because obviously if you've raised multiple rounds of capital, as Are you the solo founder? Are you like the sole founder and a team around
Yeah,
you,
I'm
or
the
do you
only
look up?
founder. Yeah,
Okay, great.
Look, it's a big challenge. So look,
Yeah,
life's about learning as you go, and
yeah,
hindsight's 2020, right? So
of course,
if I knew now what I knew then, I may have done something different, but I
of
didn't.
course.
And given the data and knowledge I had at the time, I think I made the right decisions. I think that look, if I had advice for entrepreneurs right now, I would definitely try and, for me, when I do my next one, I would like to have a technical co-founder, because
Got it.
having all the best ideas in the world, if you don't have someone that's willing to kind of maybe scratch their head and come up with something with you and kind of map it out and maybe build an MVP and just kind of build
And
a prototype, that kind of stuff.
another question around the same thing. If you were starting up again today in 2022, would you still raise capital or raise as much capital as you did, or will you try to go bootstrap with the money you have? What journey would you pick and why?
Well, I think that's, again, to give good advice to anyone, that's a scenario-based answer. So
Yeah,
I told you already I was down to my last $100. So at that point, take as much as you can, because
yeah,
what have you got to lose, right? I mean, you're already
exactly.
up against the ropes, just go for it. If I've had an exit or two exits, or I'm sitting on some cash, or I've got a rich
Yeah,
family, you might do something different, which is look. I think it bodes well to hold off on raising capital till as late as you
yeah.
can afford to do so.
Got it. Got it. And what are the future plans for your current business? Do you plan to scale it to that 5-10 million in the SaaS piece and then get a PE firm in to buy 60, 70, 80% so that they can like work with you to take it to IPO over another 5,
Yeah.
7, 8 years? Or
Absolutely. We've got our investor is a professional investor, and
yeah,
so he has very much only one win, which is an exit. I mean, that's the only win he has.
yeah,
For
yeah,
me, I have a win every day when I come in and we win a deal, or we bring on a great
yeah,
talent, recruit great talent. But I have mini wins, and he has one big win, and that's it. It's holding out for the finish line. And
yeah.
so, without doubt, we have to have a transaction in our future. The beauty of our business now is that we have optionality in those transactions. So it may not be a PE firm. It may look to merge with a company. It might be that we acquire someone else. It might be that we get acquired by a trade sale. So we're kind of, the beauty of someone's running a business. Not if we had a timeline, we've got to get out of this business in 3 years. That
That's stressful.
you to accept, exactly. It forces you to just take the best deal at that time.
No,
When you're not.
and I imagine at your scale, it's also more comfortable, right? You're not with just 4 people anymore, 5 people. I imagine at 5 to 10 million in revenue, you're like 30, 40, 50 people, maybe more.
Yeah,
What does the team look like?
well, we are, in fact, so because we just raised some money, we're above on headcount where we should be on revenue. So in fact, we were about 60 people, 62
Oh,
people,
wow.
all of
Cool.
our consultants. We've got some offshore consultants. But look, Sean, without doubt, where we are right now is, no, we're not comfortable. There's no such thing as being, if we are comfortable in, like the race car, remember you asked about a race car? If a race car is comfortable to drive, you're not going fast enough. Exactly the same.
Yeah.
Exactly the same in business. If you're comfortable, you're not doing so. You become complacent. Just this morning, I was having a rah conversation about cheerleading and getting the energy up and making sure that we close Q1 up for the highest. There's never a time to be comfortable. And reality is that we're probably in the hardest stage of a business right now. Running a business sub 1-2 million, you've got a small resource, you've got small problems, you can deal with them directly. When
Your
you've got
customers.
100 million, you've got like loads of middle management, upper management, you can deal with stuff. We're in probably the hardest part, going through that kind of 3 to 10 million
No,
for an entrepreneur.
I totally feel you because we are there too. We are between 3 and 10 mil, and we have 65 employees. So I get exactly where you're at.
Yeah, and it just changes the whole look of the life of business.
Yeah.
I said to someone the other day, I said, look, if every single employee had a legitimate issue they need help with, and it takes an hour a week, you've got to find someone that's got 65 hours in their week just to deal with just employee issues, and then you still haven't got any work done. So basically, yeah, it's a real scaling issue, and of course, as you scale, you've got to go deep.
And one of the points of stress for most venture-backed founders is also like managing like the zero cash state or the burn rate and like figuring out how long the money is lasting. So when you look at revenue versus spend and burn, what numbers are you sort of comfortable with? So let's say you're doing $500,000 a month in revenue. Are you comfortable spending 600-700 grand or $1 million? Like how much, at what point do you feel like the burn's too much and it stresses you out where you need to start cutting?
Well, so that's a scenario-based thing as well, Sean.
Like your current situation, let's say.
There's
like,
times when we've gone 2 years just generating cash every month.
Oh wow.
because
Okay.
that's what we had to do. I mean, just when the pandemic first fell, it was like, look, investment dried up. Everyone was worried what's going to happen. You can't burn cash. Get cash flow positive, and we built up a really nice cash reserve. And we built up 0 to 1.3 million in less than 12 months in cash. So we just
Incredible.
generated it ourselves. But when you generate cash, and this is kind of interesting. It's kind of, I'd love one day when I've had some successful exits to go and challenge a bunch of VCs and private equity firms. But because obviously they're smarter than I am. But like, if I only need cash to invest and run negatively EBITDA, right? So right now we came into this year with the opportunity. We always present our investor 2 to 3 plans. One is cash flow. We don't need you. This is what the business will do as growth. Or you accelerate, like your car. You accelerate harder onto the freeway. You're going to burn more fuel doing it. You get up to speed quicker. And it's the same with the business. So it's always giving the investor optionality of where do they want to invest and what story and what long do they want to get behind, which one can you defend that they can get behind to mitigate their risk. More cash in, I can't give you a return if you're not investing. I can only give you a return on your money if you're investing. And then that way I can go faster. So right now, we've hired, we're hiring 10 more people through marketing.
So you're so would you say, Jonathan, like right now you're in the mode where you're just putting your leg on the pedal and going at it and being like, you're going to burn a little more money, or maybe a lot more money, but it's going to be worth it. It's going to be worth it in 24 months.
That's right, and that's it. So look, you've got to have. You can't. There's no such thing as a 1-year investment ROI. Tech takes too long to build. Marketing takes too long to build up the leads. So what we're doing now has a return really in 18 months.
Got it. And since you do sell these multi-year enterprise contracts, how much are you willing to spend for each dollar of like annual SaaS revenue? So like, do you spend like $2 or $3 for like $1 of an ACV, like on an average?
I understand. So that's a well-known SaaS metric about dollar spent, dollar return. And then of course you could look at it over an LTV as well to say, hey, look, we're going to get it back. But we basically haven't really this year. Look, we've gone through these different evolutions of the business. We've spent some cash, got some traction. Now show you can go cash flow break even. We've done that. Now show that you can sell $100,000 solutions over the phone. We've done that. So we cut our travel costs, not going in person. So we keep challenging ourselves with different business. This year, the goal wasn't really to say, hey, let's spend $3 to gain $1. You asked about annual contract value. When we sign $100,000, that's over 3 years. So that's $30,000 a year. We've got a goal to get our ACV, annual contract value, to $50,000 just for the software. And so that's going to take us 2 or 3 years. The software is not that, it's just not, it can't command that price yet. It hasn't got that value in the market. So we're doing a lot of deep engineering and data engineering to make sure that we come back to the market with, they're buying what we sell now, but it's just got
but in terms of like this, just the sales and marketing, like S&M costs, to get that 33,000 to 50,000 a year contract, or 100,000 over 3-year contract that you're going to scale in year 2 or year 3, would you be willing to spend $100,000 up front, or is it more like you'd be willing to spend just the first year's revenue?
Oh no, on our small business, we're putting $2.5 million into it this year alone. So
got it. But like when you put in 2.5 mil in sales and marketing, do you need that?
We're not putting 2.5 into sales and marketing, that's for sure. Mostly it's going to tech development. We really are doubling. Our sales and marketing teams are pretty stout. We've got them in a pretty good shape. It's really,
but you wouldn't normally count R&D spend into CAC, right? When you're doing cost of customer acquiring customers, you would just do sales and marketing.
We spend. I mean, I could do a rough math for you. We spend probably 60%. So we're spending probably $1.20 to get $1 in for year 1,
which is very clean for an enterprise contract, right?
Yeah. And then, of course, we know that's going to have an LTV of far more than that.
Got it. And that's good, right? Like for enterprise deals that are hitting 50, 70K, like I think 18 months is pretty normal. And even 24 or higher for companies that are like hyper funded. So that's pretty cool. And what do you think is different? Like you've talked about all the similarities between being a race car driver and working with a team and being a tech entrepreneur. What's different?
Gosh, I guess the most obvious difference is when it comes to competitors. on a race car, you look at them, they're there, and you can see exactly what they're doing. And we may not know what they're doing, but with their suspension and stuff behind the scenes, but you can see what lines they're taking when they accelerate, when they brake, and you can see all that stuff. As an entrepreneur, when you definitely have, you're out competitive in the marketplace, you only really know what your competitors are doing after they've done it. So, hey, we've just done this deal. Hey, we've just done this partnership. Hey, we just launched this new tech. People aren't really telling you what they're going to do.
Got it. It takes time to react because you only get information later on. That makes sense.
I know this might be, again, another piece of, we don't really look at our competitors very much.
Sure.
The reality is that even in racing, you can't overtake someone you're looking at because you can't follow them. You've got to be where they're not, and then you go round them. And so it's kind of the same in business. Like, if you look at your competitors, maybe copying you. So if you look at them too much, then you're just wasting time doing what
you're in a circle.
Exactly.
So
we really just we have our heads down. In fact, we feel we've got the roadmap gives us quite a competitive advantage over anything else happening.
Sure.
Now it's just true execution on that.
Sure. And as we go towards the end of this, right? Like I have a few quick questions for you guys.
Yeah.
Right? For you. Like if you went back in time, right? Now this is a situational question, but it's very specific to you, right? So if you went back in time and you went back to the 90s to your 20-year-old self, what advice would you give yourself? Would you still say go for it, become a race car driver, or would you just go into tech or something else upfront? Like how would you do it?
I definitely would have become look, I would definitely become a race car driver. Okay, I would give myself some advice. As a 20-year-old, I've had this conversation just with a staff member today.
Yeah.
There's a belief that conscious consequences do not get wired into your brain between 25 and 30 years old, because you have enough failure and problems to really have the muscle memory to go, if I do this, it has a consequence, right? And so as a young person, you kind of just feel that everything's great, and then what I do is all going to turn out well. And my advice to my younger self would be, I was a driver in the race car, but I was a passenger in my career. I had other people tell me they were going to help me, other management companies, other people just saying, we'll help raise your sponsorship. And maybe the illusions of grandeur got to my head, maybe the success got to my head, I was doing very well. And I became a passenger in my own career.
Got it.
And that's the exact conversation I had with a BDR today that came to my office. I want to chat to him about how he's approaching the role. And he's 24 years old. And I said, look, dude, you just owe it to yourself if you're going to turn up to the office to give it 100%, because no one else is going to do it for you. And don't be a passenger. Like if something's not working for you or something, you don't speak to someone, even if it's your manager. But
take control, right?
Yeah,
with that,
be more control. Don't just look around at everyone else saying they're going to make it okay for me.
So I take it you're not a go with the flow guy.
Definitely, I'm not a go with the flow guy at all.
Yeah, I totally understand. And what's your personal situation like now, Jonathan? Are you married? Are you single? Are you seeing somebody?
Happily married, two young children. I'm a late bloomer, so I'm 49 years old, and I've got two young daughters, a 5-year-old and soon to be 7-year-old, going on 17.
That's awesome. That's awesome.
And again, just maybe I've had children younger in life, but I was such a workaholic. Sure. I'm a workaholic. I work 7 days a week. I work whenever my phone beeps. I can't switch off. So I don't think I would have had time for children when I was younger.
And do you have any pets as well? Like, do you have dogs?
I've got one
cats?
cat. Thanks for asking. Got a cat.
How old? Is the cat older than the kids?
We're not sure. Yeah, she's the rescue cat. So we're not sure how old she was when we got her, but we think she's around 12. Had her for 10 years.
Oh wow!
Yeah.
Incredible. That's awesome.
Yeah.
And thanks for doing this, John. I'm sure, Jonathan, that I'm sure folks are going to find this useful, listening to your journey and knowing anything's possible, right? You go from driving race cars to starting a tech company, and I think becoming a millionaire, because I'm sure you are one now, which is incredible.
Depends what currency you're looking at. But I would say this, Sean. I think that if I ever write a book, it's to give people hope that the least orthodox routes can still lead to success, but it's down to the person. Like no one's given me anything along the way, right? I had to beg, borrow, fight for everything, and I'm still fighting today. And that's what gets me up in the morning, is to get up and see how I can do something someone else couldn't. And I think if you want to be an entrepreneur, you've got to get used to being told no 100 times and still find a way to make it a yes.
Cool. That feels a lot like Rocky Balboa.
There you go.
from
I can't
the
run
rock.
like you.
Keep getting up and hit back.
Yeah, and look,
That's amazing.
it's a limit. Don't get punched in the face 50 times, and if you don't change
And
tactics,
die.
you're silly, right? Just change tactics, but just keep trying.
That's incredible, Jonathan. Thanks for doing this. Really appreciate it.
Thanks, Sean. Have a great one.